Welcome to Bloomberg ETF IQ Europe. I'm Francine Lacqua. Over the next 30 minutes, we'll bring you your guide to the region's thriving market in exchange-traded funds, everything you need to know about the funds and the flows. Now, as day traders rush to buy the dip, a triple leveraged ETF tracking the Nasdaq sees its best streak of inflows on record. Are small investors taking on too much risk? A survey of asset managers in Europe say active ETFs are set to grow more slowly than passive funds. We'll ask why the region is behind the curve. And as the coronavirus crisis upends how we live and work, we look at the one to invest in, the future of cities. So let's get started. Let's get straight to what's going on in the markets with Wei Li, head of iShares EMEA investment strategy at BlackRock. Wei Li also is a two-time mathematical Olympian gold medalist. So Wei Li, I need to get that in there because I'm so impressed with your credentials. Talk to me a little bit about what you're most excited in the ETF market right now.
Well, if we look at asset allocation trends so far this year, there are a few themes that are coming through really very pronouncedly. Number one is this search for diversification, really going out of the traditional areas, right? So diversified diversifiers is how we call it. And here we have seen a greater rotation into inflation-linked exposures out of rates as yields come so low. It's harder to see how much lower it can go even at times of volatility, and this rotation is really interesting to look at. And we have also seen the search for income going into super drive. Francine, you know that we are going to be at this zero rate environment for an extended period of time, even longer than previously thought. And if we think that the search for income was dire before, it's just gone really so much more dire now. And we have seen significant inflows into investment grade, high yield, and China bond, for example, is actually scoring really high on both metrics, diversification and income. And so far this year, for example, the CNYB iShares China bond fund is just recently hit 2 billion AUM record, and it's the fastest growing asset gathering iShares that we have seen in recent years because of benefiting from these two trends.
So, Wei Li, give me a sense of how much volatility you're expecting in the ETF market, given what we could see from now until the end of the year.
Well, we have seen a bit of a tropey kind of buying on dip, but selling into momentum, two-way activity coming into September in response to market volatility. And as we look at what could derail market momentum from now until the end of the year, volatility will be here to stay, and two-way activities will be here to stay as well. So, Francine, you talked about activities in the technology sector, inflows into triple levered exposures, outflows into technology sectors. Last week, some of the funds saw the biggest outflows in decades, right? So a lot of two-way activity will be here to stay, and it's very important to have that strategic portfolio resilience in mind as we think about the longer-term asset allocation.
Wei Li, give me a sense of how the European market is catching up with the U.S., if at all. Are we going to see a much more mature market in the next couple, in the next couple of quarters?
Well, European ETF is catching up. ETF industry is catching up with the U.S. market very quickly. With MiFID has definitely helped with the kind of greater transparency in terms of liquidity on exchange, consolidated tape, and also with greater adoption by all client segments from institutional to wealth. The runway for European ETF industry is long, and it has actually also come a long way as well. We have seen a lot of exciting development in terms of new products on the sustainable front, where Europe is leading actually globally, and also on the thematic front, we have some really exciting products in the pipeline, and also we have recently launched as well, very much playing to the fact that investors want to hear what themes are popular and also want to go beyond the ebbs and the flows of economic cycles and central bank cycles and really want to have that thematic long-term exposure in their portfolio. So the Smart City product is the latest one we have on that platform.
All right, Wei Li from BlackRock stays with us now. Let's also take a look at which countries and sectors have been attracting the money. Danny Berger has been analyzing the numbers. Hi, Danny.
Hi, Francine. That's right. I've got FFLO Go for you. So this is a look at European tracking ETFs and overall the region in terms of things that tracked it. We saw net inflows of $15 million. Now, this is interesting. I want to pick up on the conversation you and Wei Li had about the maturity of the European market. Now, often in the U.S. market, for example, we can look at these flows and get a good idea of sentiment over the past week. This is the past 5 trading days. Well, if you look at the number one flow getter, Switzerland, with nearly $80 million worth of inflows, 2 of the big products that received those inflows were UBS ones. These are really institutional products. So it's hard to look at that top inflow getter and say, okay, this is a big play towards Switzerland. But I should say, if we are seeing any play towards Switzerland, it does have a lot of quality cyclical names, which are more attractive as we enter this period after a bit of a rocky week last week. Now, looking at France, this is an interesting one as well. $14 million net inflows over the past 5 days. That's despite the fact that they've had a rising coronavirus case count. So the flows here not corresponding with that, though we are seeing Spain near the bottom of the list. Spain, of course, another one of these European countries that started to see a greater outbreak. Now, when it comes to the United Kingdom, there are a lot of ETF plays you could do with the UK if you're concerned about a hard Brexit or just want to play the volatility that comes with that. You have currency tracking ETFs, you have pound hedging ETFs, yet investors staying on the sidelines over the past week, perhaps scared to dip in, or rather just holding on to what they already have. Perhaps people were ready for the recent changes. Now, looking at the bottom of the list, we do have Sweden. There's some concerns in Sweden in terms of valuations, looking at price to equity ratios. It is one of the more expensive regions, so perhaps some more of these concerns over valuations at play here. Now, Germany, it had been in favor the week prior. Again, this is more of a cyclical play that we are seeing. Germany having pretty strong price momentum as well, but it looks like the ETF market taking some profits. However, EWG, that's the ticker. It's an iShares product. Wei Li, I'm sure, knows it very well, has still gotten inflows, and it's listed in the U.S. Again, this is this question of maturity. Perhaps some of that sentiment we're still seeing in the U.S. listed ETFs, if Germany is a good play with more cyclicals in it as well. So really a divided week across the board, but still, Francine, I'm pretty interested that the growing coronavirus case count still isn't showing up in sentiment through ETFs.
Danny, thank you so much. That's a very good point that we'll have to explore a bit further. Danny Berger there. Now, still with us is Wei Li, head of iShares, the MEA investment strategy at BlackRock. Wei Li, when you look at which countries will outperform, it was interesting to see some of the trends. Do you see a big disparity between the French market as opposed to the German market?
Well, we're increasingly seeing differentiation, both in terms of performance, but also in terms of how investors like to play their asset allocation on a country level and also on a sector level as well. So European equities have seen consecutive inflows for 3 months now, when US equities were a bit more choppy in terms of asset allocation trends. And within the European equity market, the inflows are a bit more differentiated, like given the fact that not all European markets would fare equally, both in terms of kind of the COVID containment measures and also in terms of how exposed susceptible they are to the strength of the euro. For example, we have seen increasingly investors coming to us and say, we want to allocate to Europe, but we want to acknowledge that euro has strengthened a lot. Help us understand which countries, which sectors will be more resilient to these factors as we build up our European equity allocation. So selectivity is definitely key on the country level. On a sector level, globally year to date, sector inflows are at all-time high at the moment. So we definitely see investors recognizing that at this point in the economic cycle, it's no longer a situation where rising tide lifts all boat, and selectivity is very, very key, and investors are increasingly being selective and active with ETFs.
Thank you so much. Wei Li from BlackRock stays with us. Now, coming up, a survey of professional investors in Europe say active ETFs will grow fast, but not as fast as ESG and thematics. We'll ask why the region is behind the curve. That's coming up shortly, and this is Bloomberg. This is Bloomberg ETF IQ Europe, everything you need to know about the funds and the flows. I'm Francine Lacqua. Now, how will the ETF market grow in the next 2 to 3 years? Well, Europe's $1 trillion market in exchange-traded funds has been built on low-cost, passive tracker products. But according to a survey of ETF investors by JP Asset Management, by 2023, active managed products will make up 21% of allocation in Europe. That's up from 18% today. However, investors in the U.S. expect active funds to grow even more rapidly, jumping to over a quarter of the portfolios. Well, let's get more with our reporter, Ksenia Galuchko. Ksenia, great to have you on the program. Why do investors expect active ETFs to become more popular in the next few years?
Good morning. That's a great question. So the ECC's recent approval of non-transparent ETFs has a lot to do with that. It's going to be a big driver for the rise in active ETF launches. And this basically will allow fund managers to finally shield their secret sauce, their strategy and composition of ETFs from copycats. And in Europe, such a structure hasn't yet been approved, but there's a lot of interest for it. And there's a lot of speculation that European regulators might follow the SEC within the next 2 years.
Ksenia, where else do investors actually see growth coming over the next few years?
Yeah, so in addition to active ETFs, European investors in the JP Asset Management survey say that they expect ESG, thematic, and smart beta ETFs to lead the growth over the next few years. So ESG-themed ETFs have been a huge, very popular topic in Europe this year. And according to Citigroup, about 50% of all new ETF launches in EMEA in 2020 were ESG-related. And also, if we're looking at smart beta ETF flows, ESG is definitely leading almost every month of this year, adding up to about 13.9 billion euros this year alone. So ESG has always been a popular theme in Europe. It's actually a product that Europe is leading compared to the U.S. ETF market. And ESG topic is expected to continue to remain popular.
Ksenia, is there something that will actually accelerate this move into ESG ETFs even further?
Well, of course, the recent events that we've been seeing with climate change and the protests, especially in the U.S., this has also been accelerating this topic. Obviously, when such major issuers as BlackRock make it a major theme of their focus, of their strategy, and they're trying to revamp their ETF holdings based on ESG, all of these factors are really driving the flows into ESG. And as Northern Trust has said in early 2020, they expect this decade to be the ESG decade.
Ksenia, thank you so much for all of the insight there. Ksenia Galuchko there with the very latest with some of her reporting. Now let's discuss some of the threats to growth and opportunities for expansion of Europe's ETF market. Still with us, Wei Li from BlackRock. Wei Li, when you look at this report saying that active managers are coming for a quarter of ETF portfolios, I mean, is that really the case? Is it something that that you're looking at?
I would say that there is not a clear distinction between kind of the active part of the portfolio and the ETF part of the portfolio, in that investors are being very active with ETF allocation, and sometimes the active decisions are also wrapped within the ETF as well. Just now you talked about the bigger trend around sustainable ESG investing and active being looked into as part of that as well. More recently, BlackRock launched the multi-asset ESG ETF that very much is wrapping the asset allocation piece within the ETF wrapper itself, using sustainable ETF as building blocks. So that in itself is another innovation, in that it wraps a few angles that our investors are asking for in a very neat package. So I would say that the line between active and ETFs are increasingly blurred. Investors are using ETFs to be active, and we're definitely looking into that very closely.
Thank you so much, Wei Li there from BlackRock. She stays with us. Now, coming up, how will the coronavirus crisis affect where we live and work? We'll focus on an investment which targets the growth of smart cities. That's coming up shortly, and this is Bloomberg. This is Bloomberg ETF IQ Europe, everything you need to know about the funds and the flows. I'm Francine Lacqua. Now, with day traders rushing to buy the dip, a triple leveraged ETF that tracks the NASDAQ has notched up its best streak on inflows on records. Now, the ProShares Ultra Pro QQQ fund attracted more than $1.5 trillion in the space of just 8 days. But are leveraged products a risk for investors without much experience? Well, still with us, Wei Li from BlackRock. Wei Li, what can you tell us about these types of investments?
Well, I think it's really important to look at these inflows in the context of the broader picture as well. So yes, there has been inflows into the leveraged tech exposure, but I would also make the observation that open interest for Nasdaq futures actually is at a 4-year high. So there is it very much reflects the very positive sentiment out there for technology sector. And if you look at year-to-date sector flows, technology is making up for more than almost half of the overall sector inflows. So it is just a very popular sector, and investors are using a wide range of tools to get exposure to that. Now, having said that, it's also quite choppy, right? Like inflows, outflows. So alongside the significant inflows into kind of the triple leveraged product that you just talked about, QQQ, which is the US Nasdaq ETF, actually saw the biggest weekly outflow in, second biggest actually in the fund's 21 years of history. So we're talking about really a lot of two-way activities, very much speaking to the fact that investors of kind of both views on the exposure and meeting in exchange to express their views on the sector.
Wei Li, I mean, we talk a lot about liquidity. Is there a worry that there won't be enough liquidity? How do you stress test these products?
I would actually look at various periods of volatility so far this year and point to that as examples of stress tests. So one specific exposures that I want to single out is fixed income ETFs, right? So for a long time we hear, well, fixed income ETFs, they haven't experienced as much the stress test similar to 2008 global financial crisis. But looking at what has happened so far, we would say that it's very much ETFs coming of age, and specifically fixed income ETF demonstrating that at times of crisis, it is the place where investors look to for price discovery. So this year has been a terrible year. COVID crisis and a lot of uncertainty, but it has been a good year for ETF industry because it has provided a few excellent case studies of how ETF can withstand the stress of market and have withstood the stress tests.
Wei Li, thank you so much. We'll get more from BlackRock's Wei Li in a moment. Now let's take a pause to dig down into some of the exchange-traded funds you may not have heard about. Here's Danny Berger with this week's There's an ETF for That. Hi, Danny.
Hi, Francine. Well, there's been a growing investment style or strategy over the past couple years, and that's this idea of smart cities, that cities are going to become more interconnected. The technology for things like security and transportation are going to advance. Well, there's an ETF for that. In October of last year, Amundi launched a smart city ETF. BlackRock followed behind earlier this year. But I want to focus on Amundi's ETF specifically since they were one of the first to come to market. And this is an especially fascinating strategy in the current time because there's a question to whether our city centers are going to look the same during this pandemic and after this pandemic. Are we still going to see increased urbanization, which to a large extent is what this ETF is betting on? So some of the things it includes, it targets smart mobility, infrastructure, waste management, security, Internet of Things, and wireless connectivity. Now, you'd have to imagine that a lot of those things are just getting accelerated by the coronavirus crisis. For example, things like 5G, smart homes if you're spending more time at home, if you're Skyping into your work call, you want better Internet, you want to be better connected. Also, transportation, though, on the flip side, there's a question to what investments there will look like. Now, both these ETFs do have an ESG tilt to them because the future of cities, of course, is a sustainable city. And that trend we have seen continue to survive throughout the pandemic. Now, this ETF, Amundi's, has gained 13% so far this year, so it's outperformed. It's had a lot of e-commerce stocks that have performed well in it. For example, Overstock.com and Etsy, Farfetch. So shopping online certainly has done well. Now, to the downside, again, it's betting on bigger cities, so it has a lot of forms of entertainment. It has gyms, cinemas, Six Flags, for example, is one of its investments. Those haven't done well. So will smart cities survive? And if they do, is this trend going to have to change? For now, this ETF performing very well, Francine.
Thank you so much, Ardani Berger. Now let's get back to Wei Li from BlackRock. Wei Li, when you look at some of the themes, is this going to be the sort of ETF that will really, get people excited?
I would say thematic ETFs are so exciting. They're really, really interesting themes coming through. Clients bring them to us, we bring them to clients, and I think so far events this year are very much accelerating the thematic platform. So specifically looking at the smart city ETF, you talked about the Amundi one. iShares also have a similar one. Kind of at the beginning of the year, we launched the product, and clients are very excited about that. So how do cities survive out of the COVID crisis, right? Like greater emphasis around infrastructure spending, greater emphasis around 5G and transportation. All of these themes clients want to know how to get exposure to. And I would also add specifically the iShares product has a bit of a value tilt. So for clients that are looking to time when could value finally turn around, this is something that is actually also scoring quite well. And it's somewhat rare for a thematic product to have a bit of a value angle as well, and this is something that we find resonating with clients. But more broadly, really exciting thematic platform, and I think this trend is definitely here to stay.
Wei Li, thank you so much for all of the insight. The head of iShares EMEA investment strategy at BlackRock there, Wei Li. Now that's it for this week's Bloomberg ETF IQ Europe. We'll be back with more next Wednesday, 9:30 a.m. London time. In the meantime, enjoy the ETFs. This is Bloomberg.